Warning, Darwin is the latest shiny object for property course gurus, buyers agents, and all of the lamestream media out there. And you could lose hundreds of thousands of dollars if you actually fall into this hype. Hey everyone, it's Scott here with your daily property update. Now right now, Darwin's being talked up as booming, the hottest market in Australia, with the yields over 6% and houses under 700k. Course gurus, buyers agents are pushing it hard, just like they did with Perth a few years back, just like they did with mining towns before that. But here's the reality: Darwin is a tiny, volatile market. The same factors that can send prices up 20% in a year can send them down 30 to 40% just as fast. I have even heard people talk about property investing as like the lottery, and you can hit the lottery in 1 or 2 years in Darwin. Guys, this is madness. Turn and run. Why do they love Darwin? It's small, so a wave of interstate buyers can make it spike quickly in a short amount of time. It has a headline, low supply stat they can actually sell. They can sprinkle in billion-dollar project announcements even if those projects haven't passed final investment decision, which means they may never happen. It's perfect for creating FOMO, fear of missing out, because in a small market, even a few hundred outside buyers can make it look like a boom when in fact it is not. The no skin in the game problem. Here's the problem: they're not buying there themselves. They don't live there. They don't carry the risk. They do not even invest there. If Darwin drops 30% in 2 years, they'll still have your course fee. Here's the thing about people that sell courses, guys, and you've got to be careful. I'm not saying all courses are bad. However, course creators take no accountability and no responsibility for your investment decision. So in that light, I actually rank buyer's agents higher than a course creator, because at least a buyer's agent is taking responsibility for your results. It goes like this, guys. Gurus talk up Darwin as the next 2-year double. 2-year double. Guys, this is madness. Their students flood in, often through buyer's agents. Prices spike, creating a fake sense of unstoppable growth. Once the hype cycle ends, the same people who pumped it have moved on to the next hotspot. And if you're left with negative equity, that's your problem, not theirs. The reality check. Darwin has some of the lowest economic diversity of any capital city. It relies heavily on government spending, defense, and big resource projects, which, if delayed or cancelled, can crush demand overnight. In the last 15 years, Darwin's median house price has grown about 10%. That's it. And that includes years where prices dropped hard and took a long time to recover. The smarter play. If you're serious about property, focus on locations with diverse, growing economies, stable owner-occupied demand, infrastructure that's funded and underway, not just talked about. Boom chasing in small markets like Darwin isn't investing, it's gambling with your financial future. Before you buy into Darwin because some guru, some course creator said it's the next gold mine, ask yourself, will they share the loss if they're wrong? Answer is no. Then why would you risk everything for their hype? Guys, I got a chart here with the boom and bust history of Darwin. Check it out. Anytime you hear anyone talk about property investing as anything less than a 10-year investment window, turn and run. As Warren Buffett said, guys, it's about long-term, safe and sustainable results, not trying to pick and time the market. Anytime you hear someone say it's perfectly okay to try to time the market, they are FOS, guys, full of shit. The transaction costs for property are so high. The transaction costs in and the transaction costs out, in terms of what you need to pay to get into the deal and what you need to pay to liquidate that deal and get out. 1, 2, 3 year flips is absolute madness. Trying to pick the market in a particular location down to the month is absolute madness. You will lose your money. Guys, stop trying to be smarter than Warren Buffett, guys. At the end of the day, play it safe. You want to be in the major population regions where you're going to get safe and reliable long-term growth. No stress, no pressure, just big tax deductions, solid rent, no vacancy, and sustainable capital growth over the long term. Turn and run from any course creators and turn and run from any buyer's agent pointing you to Darwin. Run now.